Well, I'm now joined by Christopher Bay, Managing Director of Bank of America Merrill Lynch and co-head of Global Foreign Exchange Options. Christopher, thank you so much for coming in. Over the last 2 days, after we had the announcement of bin Laden's death, there seems to be a little bit of a relief rally and then a little bit of a pullback because investors are concerned that we're going to see retaliation. What do you make of this very significant death?
Right. That's a good point. I think what the price action describes isn't so much a flight to safety, but actually a perspective on maybe we've rallied so much that very little of retaliation is priced into the market. So actually it's a time for, we moved a lot, the dollar is at the lowest levels of the year, and it's just time to really regroup and take perspective on how far we've come.
So almost a little bit of a correction on the markets.
That's right. It's more a reflection of where we are in price rather than a flight to quality.
Now, Christopher, what do you look at today? Because there's so much going on in terms of inflation, in terms of interest rates, but also just in terms of volatility that will continue in the months to come. What is your biggest concern at this point?
That's right. Well, I think what's driving the dollar and currencies in general isn't so much what we're hearing in the headlines, whether or not it's a negative outlook on the U.S. or the like. I actually think what's driving the dollar currently is more related to what's happening in the Fed funds market. So really interest rate differentials and carry. While that's not been a popular investing strategy since the financial crisis, it's actually having pretty good returns right now in the currency market. If you look at short-term interest rates in Europe, we're pretty much at the year's highs, and likewise, we're pretty much at the year's lows in the Fed fund futures markets.
And actually, the carry trade that you mentioned is something that's come back over the last couple of months, where it had almost been gone from the markets for several years.
That's correct, and I think that's identified in the CFTC report, where we're seeing record short amounts of dollars almost historically, and the usual funders are there: the dollars, the yen. And to a less extent, Swiss franc.
And I understand that you say, or your advice to investors would be not only play the foreign exchange markets, but actually the derivatives markets, because they represent better options.
That's right. We're seeing some anomalies out there, the real statistical anomalies in what options markets are telling and investors. I think one of the results of the financial crisis is, in fact, it's been a change of structural reform in the derivatives markets. Perhaps it's legislation, and perhaps it's end user sentiments around derivatives. These anomalies have continued in the foreign exchange option markets and really provides really good risk-reward opportunities for end users.
But at the end of the day, do you think that the dollar will weaken further? Because I guess any derivative has to be based on that premises.
That's correct. Our outlook on the dollar is that perhaps short-term it's oversold. I think we forget that certainly Bernanke recently was quite dovish, or at least that's how the market's interpreting it. Certainly the Fed funds futures markets are implying that interest rates are very low in the front of the U.S. But I think while we're very good at being forward-looking, we're kind of forgetting the backward-looking part of that, and that QE2 does end at the end of June.
Yeah, but we don't know exactly what will take its place afterwards.
That's right.
Chris, thank you so much.
Sure.
Christopher Bay there.